Peter Eliades with you. This is Stock Market Cycles YouTube update for Wednesday, November 30th, going on late at night. Right now, as I begin the recording, it's 8:19 p.m. Pacific time, 11:19 Eastern time, and by the time we get through processing it, it will probably be close to, I don't know, 8:45 or so Pacific, 11:45 Eastern p.m. on the night of Wednesday, November 30th. A lot of things to talk about here. On our last update, we indicated that we thought we were very close, if not at, a market top. We feel that's exactly where we are again now, but let's stop talking about what we think subjectively and show you some objective things, both technically and cyclically, okay? Let's begin with this chart. This is a chart of the S&P 500 cash index, and it goes back, well, back to May of 2021. But the important things we want to look at now are a 57 trading day, not calendar day, 57 trading day turning point pattern. Turning point patterns are cycles of a type, but not the type of cycles that each point to a high or each points to a low. Okay. So this one points to turning points, and let's show you how well it's worked for over a year now. This is the all time high, January 4th. These are intraday readings of 2022. Let's take a look at what's happened every 57 trading days since then. Here's the first resolution after the January all-time high. It was one day off this very important high on March 29th of this year. One day away. Then we had this very sharp decline. The decline ended exactly another 57 trading days later on June 17th. The closing low was June 16th, the intraday low on the S&P June 17th. An exact resolution. From there forward another 57 days, that fell on September 9th of 22. The high came one trading day later on the 12th. So this was a Friday, Monday. The high came on the 12th, the Monday after that Friday. And you go forward another 57 trading days, and lo and behold, here we are. Okay. Now, let me say, before we look at anything else, we are in what tends to be a seasonality-wise favorable time of year. Usually from late November into early December, for those 3, 4, 5 days, they tend to be quite bullish, okay? And December tends to be a bullish month, probably the most bullish month of all, if you look back a century or so. And so what I'm saying is there is an excellent chance that we fight that seasonality and that we begin a very sharp decline very soon, if not tomorrow. In fact, there are some cyclic things that say it better begin tomorrow or we will start to get higher upside projections. So that's where we stand. I wanted to start off with this 57 trading day pattern. Oh, I don't know if I went back here, but look at this. The one before the all-time high occurred on October 13th of 21. It wasn't the low, but it was a secondary exact low right here that led to a huge rally into the all-time high, okay? So that resolved right on the 57th day also, okay? So the pattern has gone on virtually perfectly for 1, 2, 3, 4 resolutions. We can't promise you it's going to continue on here and for this to be a high or maybe slightly higher high tomorrow. But the pattern says that the cycle turning point pattern is resolving right here in real time. Okay. Wanted to show that to you. All right. Next. Okay. This is the CNN Fear and Greed Index. Okay. They explain it on their website. Here's the URL right up here, cnn.com/market/fear and greed, if you want to go look at it, okay? And this is what it looks like. Again, the explanation of how it's measured is down below. It's a sentiment indicator. When there's a lot of greed in the market, everyone thinks, hey, we're going straight up. Usually a bad time to be buying or to be in stocks if you're a short term trader. On the other hand, when you get down into this area, which is extreme fear, okay, that's the time to be buying. Where do we stand now? Well, here we are, right here, folks. Take a look back to the left. This is the full year in here. Here's the beginning of January right here. This is the all-time high in the market right here. January 3rd of 2022. Okay? That's the all-time high in the S&P and in the Dow Jones Industrial Average. Let me give you a little guideline here, okay? This is the January. Follow this horizontal line across. That's where the January high occurred. We went a little bit higher at the August 16th high, and look where we are today. I'll put my sideways horizontal line on where we are today. Take a look back to the left. Nothing higher all year long. Does that guarantee a top? Nope, no guarantees here, folks. But it should make you aware of where we stand sentiment-wise. It fits in nicely with the 57 trading day pattern that points to today within a day or two at the most of a possible turning point. And now let's take a look at some other stuff, technical stuff, before we look at cycle projections. Okay, here's one of my favorite charts. You can use this as the QQQs, which is the ETF for the NASDAQ 100, okay? Or you can use the NDX, or you can use, I think you can probably use the over-the-counter composite. They should all look basically the same. This is a fascinating chart. And again, it's pointing right here, right now, within a day or so at the most, of what should be a turning point in the market. Let me show you these various indicators and lines that are saying that. I'm going to take this off because this is that 57 trading day pattern that we've already looked at. Okay. Let's start with a very simple technical tool. Let me make it a little broader here and a different color to distinguish it. Dark green, and we'll make it a little chunkier. This line goes from the low in March of 2020. That was a huge decline that happened very quickly here, through what was the low of the year in June, okay? So what happened is we're measuring this trend now from the March low, closing low. These are closing prices. The March closing low on the QQQs through the June 16th closing low, okay, right above my pointer here, June 16th. So what happened? Well, we bounced off there, had a big rally, came down to it, and quickly broke below that line, okay? And since then, we've broken below it, rallied up towards it, broke even further below, rallied up towards it, came down and tested this low, and now, in the last week or two, we've come up to it from underneath. This was on November 15th. Little play around up and down here, and today, this huge rally today. Look at this, 4.7% up on the QQQs, getting everyone excited, say, whoa, here we go again. I told you. And here we are. Let me zoom in on here so you can see what's happening. This green line is the March of 20 to the June of 2022 trend line, and here it is today. We tiny bit of a throw over above it, okay? That's allowed technically as long as you don't start making a move like this. So this should be very strong resistance, having come back up to there. couple of trend lines, very short term, in black here. One of them goes from the high of October 4th through the high of November 15th. And here it is right here. Again, a tiny little throwover. The other one goes from the high of October 25th through the closing high of November 15th, the same second point, and that one is right here today, okay? Very, very tiny throwover. So there's resistance from these three lines, the long-term one from March of 2020, these short-term lines that we see in the pattern where recent highs have occurred going into the October 13th low, okay? So those are the trend lines. What's next? Let me show you. Okay, speed resistance lines. I've talked about these on YouTube before, some of my favorite technical indicators. Speed resistance lines are constructed by going either from a low to a high or a high to a low. We're going to do both of them here. Here's that same low in March of 2020. Closing low is on March 16th on the QQQs. So we take that low and draw a line from there to the all-time closing high in November 19th of 21. And then what do? Well, very quickly, you go directly down from this high to a line where the low occurred over here. So you draw a line across horizontally here, just exactly under the high, okay? November 19th, and then you break it into thirds. 1/3 and 2/3 and 3/3, okay? And then you draw a line from the low through these 1/3 and 2/3 line points right here on the vertical line from high to low. So you can see those lines here. Here's the blue one, and here's the red one. Speed resistance lines. The sharper slope is called the 2/3 speed resistance line. The lesser slope is called the 1/3 speed resistance line. The general rule is if you break the 2/3, and let's quickly go over how that happened. Came down to it fairly quickly in January 27th, had a nice rally, came down and held again, then broke here pretty decisively. Rallied back up to the line from underneath with a very slight move above, broke it again, and the breaking of this line implies a move down to the 1/3 speed resistance line. Well, look at this. Wham! Here's the 1/3, this dashed red line, closed almost exactly on it June 16th. We did a YouTube update within a few days of here and said we should be at some kind of bottom here. We had no lower projections. They had all been met, and we had come down to this speed resistance line, and sure enough, look what happened after that. So, good rally. Took us into August 16th, and then we came down and we broke the 1/3 speed resistance line. Came up towards it, broke even further, came up towards it again, tested that low, and now, in the last few weeks, we've come right up to it, almost getting up to it on November 15th. And today we had this huge move just underneath that rising 1/3 speed resistance line. Okay. The breaking of this, which has occurred already, implies that you now go down to this low or close to it. You certainly go down towards that low. That low's all the way down at the 169 level on the QQQs. Okay. I think it's the equivalent of around 7,000 on the NDX. It's a huge move. And the implication is we're about to see such a move. Broke below it, came up to it, below it, came up to it, below it, came up to it. So now 3 times we've come up towards the line from underneath without the ability to break well above it again to reestablish the bullish case. Okay. So this is all bearish action in here. If you can get convincingly above that line, reestablish yourself in bullish territory, that's a different story. I don't think that's going to happen. Okay, so that's the rising speed resistance line. How about the declining one? It's constructed the same way except in reverse. Now you go to this same high that occurred, a closing high that occurred on November 19th of 21, okay? And you go to the subsequent low. There are two lows down here. We can use either one of them. I used the first one, okay? October 14th was the closing low, okay? So you draw a line from that high to this low, and then you draw a vertical line up from the low to the high right here coming across. And again, break it into thirds. 1/3 of the way up, 2/3 of the way up, all the way up. Then you draw trend lines from that high through this line that's broken up into thirds again, okay? This again, the less steep line is called the 1/3 speed resistance line. It's now coming downward. And the sharper one is the 2/3. Well, look at this. Speed resistance lines, by the way, they don't not like trend lines. You come up and hit them exactly. They're called resistance because you should find resistance at them. And look how that's happened virtually perfectly. Now, mind you, you couldn't draw this line until the October low. So you can't say it picked out these highs perfectly, even though we got a little bit above it, because this could not be drawn until this October low. Okay. When this occurred, you had different speed resistance lines working. But here's my experience. If you see that this line, in retrospect, after drawing it here, worked pretty low in identifying areas of resistance for the market, as it did here twice at the March high and the August high, that's a pretty good line. And look where we are again, right here. In fact, this long term speed resistance line and this shorter speed resistance line to the downside meet within 1 day of today. I think it's between the exact meeting is between yesterday and today. So look at all that's going on here. Trend line, dark green line, right here. We came up to it. Speed resistance line, 1/3 speed resistance line from the March of 20 low, came right up to it today. Down speed resistance lines from the all time high in November down to this subsequent low in October. Here we are, came right up to that zone today. So, I mean, how many more areas of resistance do we need to find? If the market makes the kind of break, I mean, you could see a little bit of a break here, even though the timing is critical because of the 57 trading day pattern. You could see a little bit of a break here, but if you start seeing the market get back up, especially above these previous shorter term highs here, we're looking at a different story. We can throw this analysis, you don't throw it out, you just say, these are showing us very serious areas of resistance. If we get above them, then the market's telling us a story. It's saying we obviously didn't intend to stop there. But because there's so much resistance going on here, the trend lines, these two trend lines come right in here. Speed resistance line here, longer trend line there, downtrend line here. There's huge, or there should be huge resistance right in here. Let me zoom in there so you can see where we closed today. Here's today's close right here. Okay. Right into that area, just below the speed resistance, just above these trend lines. So here we are, right in this area here. If we have some kind of follow through tomorrow, I would imagine it would stop around these speed resistance lines, which on the QQQs now is around the 294, 295 level, okay? If we have some follow through intraday. But there is huge resistance up here. And let me show you some of the most important things of all now for me, where my market work involves price projections. Let's look at them on the QQQs. Okay, let me start out by showing you some outstanding downside projections. When the QQQs topped in August and broke below these offset lines right here, these cycle offset lines, they generated a downside projection to between 236.08 and 255.87 rounded off, okay? Never got down there. Got fairly close at these two lows, but never got down to the projection. That projection remains in effect, but it's right here is trouble territory. If we get decisively above this funny little blue line here, let me show this to you on a chart. This chart should make the picture clearer, okay? If we get above this gray area, I call it the continuum because it's the difference between these two offset lines, 48.4 and 55.3. So this is how little territory we have for margin of error. If you start getting above the 296, 97 on a closing basis on the QQQs in the next day or two, this downside projection is lost. Okay. So that's one of the downside projections. Let me show you another one that's still in effect. Okay, now this is a little tricky, but I'll explain it to you. Here's the all-time high right here, November 19th on a closing basis, okay? There was a very close to a double top there. The close here was 403.99, and on December 23rd, it was 396.92, okay? So they were pretty close to each other, but the all-time high on a closing basis occurred right here. If you close beneath both of these lines, this continuum, and I'll show this to you again on what I call the web chart of a continuum chart. Okay, so here is the all-time high. We crossed into the continuum. That gave a preliminary downside projection to around this area right here, okay, the top of the red box. In order to confirm that projection, you needed to close below the continuum. Well, you did that one time, two, three, four, like 4 or 5 times. This confirms this downside projection. The fact that we got back into the continuum does not invalidate this projection. Now you have to get above the upper side of the continuum to invalidate that projection, okay? Now, that's one explanation in what we're looking at, significantly lower projections. Here's the other thing, the other consideration. This is a crazy downside projection here, okay? It's talking about all the way down to 124 and 201.53. So this is a linear projection. Okay. By that, I mean you measure the distance from this high close to the crossing of the first line here, and then you measure an equivalent distance down from there, and that's the top part of the projection box. The lower part of the projection box measures from this high to the lowest point in between these two lines. Okay. That's right here. Okay. In fact, these two little red horizontal lines measure the highest point of crossing and the lowest point of crossing. And this one would give you a projection all the way down to here. These are linear projections, and I don't trust linear projections. Just in the last year or two, I've started doing some work with logarithmic projections. What you do in that case is the reason I did that, by the way, is because some of these projections that we're getting go into negative territory now. If you see projections go into negative territory, you know prices are not going to go into negative territory. So what you want to do is do it on a percentage basis. What percentage decline from here to this first horizontal line? Then you take the equivalent percentage of this price and go down in time, okay? You do the same thing for the lower end. What's the percentage decline from here to this horizontal line? And then you take an equivalent percentage down from this line, okay? So that's a logarithmic projection, and watch what happens. We go to logarithmic projections, and it changes fairly dramatically, okay? Now you're getting a projection on a logarithmic basis using percentages. It's still a significant way down, but it calls for 172.73 to 226.90. That's a big downside projection, even the upper one at 226.90 from a current price of 294, talking 70 points. You're talking more than 25% down from today's close, okay? But the point is, this projection is in effect. And the only way it can be invalidated is to get back above the upper side of the continuum, okay? Otherwise, this remains in effect, okay? All right. So that's it. There's so much going on here. Let me see if there's anything else I wanted to show you. I talked about seasonality. See, that's what goes against what we're looking at here, because seasonality is very favorable historically between Thanksgiving and Christmas, and especially in the first few days of December, and then again from mid December to the end of the year, going into early January. Those are very favorable times seasonality wise. There was a period, let me show it to you on the chart here. Okay, how many of you remember this? I mean, it was hard to forget because it was an incredible move, completely unexpected because of seasonality. This is 2018, okay? 2018, we saw a high. Again, we're on the QQQs now. On August 29th of 18, went sideways, down a little, sideways, whatever. And then, after a big rally into December 3rd, look what happened. Huge decline. How much of a decline? From this close on December 3rd to this close, I believe it was Christmas Eve right here. There you go, December 24th. 17% decline in the 3rd to the 24th, exactly 3 weeks. Down 17%. Okay. So, the only reason I show you that is my dad used to say, God bless you, Dad, the exception proves the rule. Okay. So, this, I guess, was the exception that proved the rule here. Huge decline right in the very favorable seasonality period of December. In fact, here's November 30th of that year. Okay. November 30th was a Friday. The 3rd was a Monday. And this is what happened. Exact same time zone that we're in now. We're in November 30th right now. Okay. So here it is here. And this is where we were 3 weeks later. Okay, that doesn't mean it's going to happen like this time around. Don't get me wrong. It just means that seasonality, yes, it's a pretty good tool if you use it wisely, but don't count on it to, you don't come into December saying, hey, you buy anything you can now because the market always goes up in December. Huh, look at this. Okay, I think I've shown you everything I wanted to show you. I think you know how I feel about the market now, what I'm looking for. Remember those downside projections we showed you. Now, on the S&P, we're very close to invalidating any downside projections. If we continue up for another day or two, especially if it's any kind of magnitude to the upside, the S&P will no longer have any downside projections, okay? So be aware of that. This is what we're looking at. I know it's been a while since I've done a YouTube update. I wanted you to know where we were and exactly where we were as we reached the 57th day of a pretty consistent cycle, one that's been consistent all year long. Some of the most important turns: January 3rd, March 28th, 29th, June 16th, the exact important summer low, June 16, 17, and early September. And now the resolution supposedly resolves today, plus or minus a day or so. That's it, folks. I hope you've enjoyed this. That's where we stand on the market. Have yourselves a great holiday season coming into the end of the year. We'll be doing another update. I can't tell you when, but if I see something important happening in the market, I'll try to be here to guide you through it. Thanks for watching.